Hey guys, welcome back to Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today we are looking at Nordstrom Inc., ticker symbol JWN. This stock has been kind of whippy between $15 and around $27, back down to $14, and now it's at $22.70. What's in store for the stock? Is the stock priced correctly? Is big box retailers going down? We're going to dig into that. We're going to see if institutions and hedge funds are buying. We're going to see if they're selling. We're going to see if there's manipulation. We're going to see if the money flow is growing, if the strength of the buying or selling is growing, and a lot more. Without further ado, let's subscribe and hit the like button and jump on in. All right, you guys, we are on finbiz.com and we're looking at ticker symbol JWN. Okay, so the first thing we notice is there was a huge jump. Looks like beginning of February of this year. The stock went from 21 to 27, and then it filled the gap, and then it just went lower and lower and lower, and then it's now been reversing. It got as low as $14.12, and now it's up to $22. That's almost 100%. That's over 50% gain since mid-May. It appears to be attempting to potentially make a cup and handle with the left cup over here. Right cup would be up where my face is. That's a potential there on the daily. We can see it's really overbought here. So the strength got really hot. It's coming back down. Momentum is coming back down. We did see the momentum swing up right about here, which was around $20, went up 10%, and now it's coming back down. The money flow shows that it's leaving, and the relative momentum index is strong at the moment. Down here, all of this is on the daily, though. If you know me and you know my channel, we look at the macro, we look at the bigger picture, and then we work our way down. So let's look at the weekly now to see if we have a pattern or some type of discernible chart that we can kind of glean off of. So RSI is getting stronger. It's at 62, which is strong. Anything over 50 is really strong. MACD is heading upwards. So again, May to current, it's gone about 50%, which is huge. Money flow is people are throwing money in on the weekly, and then relative momentum is going upwards. So stock is gaining more momentum upwards. And on the monthly, where I prefer to look, RSI is at 50. MACD is turning up, and money flow is going up, and relative momentum is also going up as well. Just really quickly, we can see that the stock has not broken over the 50 SMA in almost 3 years. So the last time the stock was above the 50 SMA was October of 2018. And you can see the stock fell through resistance, 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 and then it's gonna try one more time this month. It looks like the momentum is heading upward. We saw the momentum head upward right here as well, but it could not break the 50 right here. Is there anything we can see that would show that it's going to break upward now? We can see at this level right here, the RSI was at 47 and it went up to 58. The MACD, it was going upwards. The money flow was at 52. Right now we're at 45.89. The relative momentum indicator was really low. It was actually at 28, and we can see the relative momentum right now is at 39. So this time could be different. We're gonna now check to see our institutions buying or selling, because they can drive the price of the stock up if they are accumulating. So going on down to the financial data table, we can see institutions own around 58%. I don't know if that's high or low based off the stock price. It's now 68%, so that's up 10% more. And if we look over here, it might be hard to tell, but these last 7 candles right here that I'm circling are higher than the last like 15 candles over here. So that's good. No real big selling. FMR sold a bit. BlackRock sold a bit. El Porto de Liverpool started a position of 15.7 million shares September of last year. So institutions do own quite a bit more. Um, so that is good. We can see that the current stock is very overvalued, but in the future, it's actually undervalued. So if I had to break that down into layman's terms, right now they're very overvalued, meaning once we do the calculations here, um, you know, it could be overvalued, but in the future it could be undervalued. So earnings per share this year is 38%, but next year is 3.34%. So how does that make it undervalued in the future? They are guiding out for the next 5 years. However, we know it's hard to guide out in 5 years because of things that happen in the world. You know, look at everything that happened in the last 5 years. I don't think anybody predicted that. So whenever you see a company guiding out 5 years, that don't really believe it. They could be underestimating or they could be overestimating. You just never know. So let's figure out the stock price. What should the stock price be? So they make 15 billion 140 million. Good for them. They only make 20 million income. Whoops. That's not a whole lot. And they have a market cap of 3 billion 710 million to add right there. Now we're going to add the cash and the debt, and then we're going to divide it by the shares available. So institutional buying and selling. The chief customer officer looks to be off the hook for that. The chief merchandising officer also, they sold 25,000 to get 25,000. Okay, cash, they have 687 million, which historically is mid. It's not the lowest, it's not the highest. So we're going to add $687 million. And we're going to remove the debt, which I'm guessing is a lot. Total debt, 2 billion, not that bad. Minus 2,856 million. And total assets, 8.7 billion. Total liabilities, 8 billion. Not that much of a buffer there. Wow, it was really close back in 2021. They had 9.5 billion in assets compared to 9.2 billion in liabilities. So they've been cutting it really close. That was the closest it looks like. It was about 250 million. And then from there, it's slowly been separating. So they're getting better. Total debt is also not the worst it's ever had, but it's pretty high. This is like the second highest it's ever been. So a little bit worrisome there. Total liabilities also not the worst. Not the worst and also not the best. They are continuing to pay down their liabilities, it looks like. So, for example, last year they had 8.2 billion in liabilities. The year before that was 9.2 billion liabilities. 2020 they had 8.7 billion in liabilities. So it looks like it's getting better. Okay. And let's just look at while we're down here. Total revenue. Wow, they're back to 2018 levels. So back in 2018, they were making the same levels. The cost of revenue is a little bit more expensive. Gross profit, they made less in 2018 than they did in 2023. So little hesitant there. It looks like they're doing better. This year, however, their net income is pretty low. What's going on here? Operating income's really low. Their net income before taxes is also really low. So that's something you're going to want to watch as they continue to report quarters out. You want to see what their net income is. Okay, so we have our financials here. So now we're going to divide this by 113,950,000. So we can divide it by, since there is a pretty big gap, we can do it by the shares float. That'll give us our aggressive price target, and we'll divide by 160 as well, and that'll give us our more conservative price target. So on the upper end, the stock price could be $146. Now we want to take the, let's take this if we can, plus 0. Whoops. It was 16,701 billion. Okay, 16,701. Okay, divided by, now let's do 160 million shares, 800,000. $103. So the stock is trading very low in relation to where it could be. Institutions are buying more, which is good. Sales are doing okay. It's kind of hard to forecast because their earnings are coming out here this month, but also they report on the first of the year. So we've gone through 6 months of the year, and it looks, let's see, quarterly. They reported 3.18 billion already. So if we do 3.18 billion times 4, that only brings us to 12 billion for the year, which is less than the 15 billion. But what are they guiding out? Let's see. When did they report last? Let's see here. If they can do 4 billion for the remaining quarters, that would be good. Number of stores is going down. It looks like I don't see that they are forecasting. This is Zach's article, I think. Yeah, okay. Here we go. Okay. Also, is their Q1 historically weak? So, or the 429, so 3.1 billion compared to last year was 3.5, so it is a little bit, it did come in softer. This is by Zach's. It's all by Zach's. Come on. They don't show the guidance. Come on. Okay. Maybe here, Barron's can give us some information. Oh man, this is so annoying. I guess see that could be your homework, is see what they're guiding out for the rest of the year. Historically, I mean, historically it bounces between 3.5 bill to 4.3 bill. So we don't really know for sure. Looking at the we need to see the guidance. Why can't they just show us the guidance? First quarter, okay. Fiscal, okay. The company reaffirms revenue outlook for 2023, which was okay, so it looks like it's gonna be down. But I mean, that's based off of closing of stores in Canada. So, that could also help them because they're not paying for the space. So I will let you. I'm giving up on looking for guidance. Although that last one did show 4.3 something. So eight routers. Okay, so they did. Oh, that's Q4. That's Q4. We don't care about Q4. Okay. Okay, so I'll leave that up to you guys. In terms of the stock price, I think historically it is not a bad price. I mean, kind of looks like it's struggling a little bit. I don't think you could go wrong waiting this one out, in my opinion. And I only say that because there's a lot of resistance. So let's just build this out really quick. Okay, so we have this resistance here, which has been in play for 3 years. Then we have this other resistance, which has been in play for about 8 years. So I don't know if the stock price will get over to here anytime soon, but um, this, the line in the sand support we want to watch for is right there. So yeah, that is kind of where we're at. I think you can't go wrong waiting this one out. It also is a dividend paying stock, so yeah, I don't know how I feel about this one. The sales are for 2023 going into 2024, I think sales are going to be lower than 15 billion. But their debt should also improve. So with their debt improving and sales also going down, it's going to make them a healthier company. Gross margins are high. They do 15 billion in sales. I mean, if they can get their debt under control, this is going to be a really strong, healthy company. I think long-term resistance is going to be right here. So we could see the stock price go as high as 26. Again, it's going to try and break this 50 SMA. So I'd be on the watch for that. See how it reacts to the 50 SMA. Is it going to try and break up, break down? And then we have the 200 SMA right here, which is around $40. So if the price successfully breaks this 50 SMA and holds above it, we're going to see it break through, and then we're going to see it tap it. It's going to have to tap it to show a support. So what I mean by that is the stock price will likely go up above it. It'll, maybe trade sideways for a minute, and then it'll tap back down on it to reaffirm that the stock price is ready to move above the 50 SMA. Again, the stock price has not been ready to move above the 50 SMA since August of 2018, so 5 years ago. So again, we'll watch out for that key resistance. It could get rejected and come back down to $15, $16. So just be aware for that. So for this one, I would just be watching it for now. Momentum is on our side. Strength is also on our side. Money flow is on our side. Relative momentum is also on our side. So a lot of things are on our side. However, we've got a 5-year resistance of the 50 SMA. So just be careful. If you guys made it this far, please consider hitting the subscribe button, hit the like button, and I'll talk to you soon. Thanks. Bye. Actually, before I go, here is Nordstrom. I do want to look at the yearly momentum, not the weekly. My fault. The yearly. If the yearly momentum is in our favor, ooh, it kind of is. Look at this momentum right here, turning upwards. So what I need to see happen, look at this, look at this, look at this support that's been here all the way since 1987. The stock has bounced off it so many times. Look at that. Oops. It's so close to bouncing off of it down here. Look at this. So maybe we need the stock price to come down and tap this. So I would wait for a tap. 12 looks like around 1279 is the magic number. Watch for a tap, maybe accumulation. Down here we can see it accumulated for a few years and it rose up, came back down and tapped it for 3 years. Then it really rose up, came down, tapped it to reaffirm the support and just went upwards. This would have been the best. So from $9 to freaking 83, and now it's just kind of trading downward. So again, patience with this one in my opinion. Again, if you made it this far, please consider hitting subscribe. For real this time, no fake outs. Have a good one.